at your doorstep.
Welcome back. Well, the SGX Nifty for now is indicating a 350-point cut. It's trading at 17,474 versus the Nifty futures Tuesday close of 17,828. So let's see if that actually shapes up. The market has been very, very strong. There's large buying from FIs as well. So let's see if the dips get bought today. But Anuj, what are the stocks you're looking at this morning?
Yeah, Sonia, just to reiterate the point I made, I think some people may have misconstrued it. You have to weigh in the risk reward, and if the market's message is that lows are breaking, then you're out. But otherwise, I mean, as I said, after 350-point gap down, you look for opportunity to see if the market's recovering. If there is a recovery, it has to be led by domestic stocks. So the stronger stocks is what you focus on. Bajaj Finance, I think that's been the strongest stock in the market for some time, ever since its numbers. Massive delivery buying again on Tuesday. Bajaj Finserv, again, same story. And most of these stocks you will see are showing rising trend line and a rising 20-day moving average. Hindustan Unilever and Britannia, crude's also down. That also helps on margins. So I think these are the kind of stocks that you sort of focus on. If the market has to rally, the domestic stocks, they will have to lead it and not the export-oriented stocks. That's why I'm watching out for all these names.
All right, Anuj, thanks very much for that. We'll keep an eye. Now, Z has got a bunch of news flow. Important to note, Mangalam is standing by with all of that. Mangalam, good morning.
Good morning. So, two reasons why Z is in focus today. The first one is that, on Tuesday late evening, they announced that they've signed a licensing agreement with Disney Star to broadcast ICC events. ICC events would between 2024 and 2027, which would include a couple of champions, one champion trophy, a couple of T20 World Cups, and the 2027 Men's World Cup itself. The deal financials have not been disclosed, but analysts do believe that the payments for this, because it's a licensing agreement, would be staggered and will not impact their bottom line as much. But importantly, it can help increase their linear TV viewership, as the company did not have a significant presence in sports. So this was the one missing cog. So that's a positive. However, yesterday we got a news piece coming in from Reuters saying that the CCI's initial review of Sony and Z merger has found some competition concerns. Analysts out here believe that because it's just an initial review, information exchange with the CCI is not unusual, and the overall market share for the market in which both these companies operate is rather fragmented. So at best there could be just a few changes. So not really a big worry, but will continue to be a bit of an overhang. Z has written that the numbers mentioned by the story in Reuters have been old, so the dialogue with the CCI is continuous. There could be some positivity on Z on account of the deal that they've done with the on ICC events, but this could play as a counterbalancing overhang on the stock too.
Okay, thanks a lot for that. Well, I'm watching out for ONGC and Reliance because the windfall tax on crude has been increased. And because of this move up and down, there's a lot of volatility as far as the windfall tax is concerned. Sometimes it's brought down, now it's been raised. So there's added uncertainty on these stocks. I'm going with red over there. The tax on crude, the windfall tax on crude has been increased to 13,300 rupees per ton from 13,000 earlier. Also, the export duty on ATF has been raised, the export duty on diesel has been hiked, and the export duty on petroleum, though, remains nil as of now. But because of the rise in the windfall tax, I'm going with red on these stocks.
Okay, we're going with red on these stocks. Let's see how they move. Now, Rima is covering a couple of pharma stocks this morning. Rima, hi, good morning.
Hi, good morning. Let me start with Biocon, where there is negative news. The US FDA has issued 11 observations each for its 2 sites in Bengaluru and 6 observations for its Malaysian site. The US FDA inspections took place in the month of August between 11th and 30th of the month gone by. The company said the inspections were on account of 3 pre-approval inspections for their drugs, as well as a capacity expansion inspection for the biosimilar trastuzumab. The company says the observations primarily relate to improving strategies for microbial control, enhancing quality oversight, augmenting the use of software applications, computerized tools to aid risk assessment, and other procedural and facility upgrades. The company says in the exchange filing, they do not expect the outcome of these inspections to impact the current supply of their products, but expect an overhang on Biocon because of the US FDA observations. Glenmark Pharma has indicated that its partner Hikma Pharma has also launched a seasonal allergic rhinitis nasal spray in the US, and for Zydus Life, they've received a US FDA approval to market a generic version of a tablet which is used to treat nerve damage and depression.
Okay, thanks a lot for that, Rima. Well, one stock in focus has been Ashok Leyland. It's been rising for the last many days. And this morning, there is news that Ashok Leyland has bagged a mega bus order from United Arab Emirates. So this is an order in the UAE for 1,400 school buses, and it's the largest ever bus order that Ashok Leyland has bagged. The total fleet deal is worth $75.1 million. And not only that, Ashok Leyland has decided that they will start testing the demand for electric buses and MHCVs and LCVs in UAE as well. The company says that the bus demand has revived significantly because of the opening of schools and offices. Remember, Ashok Leyland is the market leader in MHCV buses in India and is the 4th largest bus manufacturer in the world in volume terms. The stock has already gone up about 26% in 2022 and is expensive now. It's trading at 21 times forward. But I'll keep an eye out on this stock. I'm going with green because of the big bus order that they have received.
Absolutely. Sonia, Spicejet is also got news flow, right?
Yes. So, Spicejet delayed both their March and June quarter numbers because of the issues that were going on with the company. Now they've released both those numbers and looking very weak. The losses are piling up for Spicejet. In Q4, there was a net loss of 485 crores, which has risen substantially compared to Q4 of last year. In FY22 overall, they've seen losses of 1,721 crores. This compares to 1,000 crores of losses in FY21. And in Q1 as well, the losses continue. So they've reported losses of 784 crores. Now, apart from all the other issues that they are facing, the rise in ATF prices is the big reason for the bottom line getting hit. So in Q4, for example, ATF prices went up 105% year on year and 40% quarter on quarter. Ajay Singh of Spicejet said that this is the most severe operating environment in the recent past. It is record high ATF prices and a depreciating rupee that were the major problems for Spicejet. So I'm going with red over there. But Vahishta is also joining in to give us some more stocks that are in the news. Vahishta, over to you.
Thanks for that, Sonia. Well, GMR Group has said that they shall be divesting 30% equity stake in PTGEMS, which is engaged in coal mining in Indonesia. Now, the GMR Group is expected to receive in excess of $420 million from this deal. Now, the divestment at present is aimed at strengthening of the balance sheet through significant reduction of the corporate debt. Now, as on 30th of June 2022, the net debt stood at 7,800 crores, and the divestment shall provide an impetus to the non-airport business through the reduction of the leverage and provide a platform for their green energy initiatives. We also know that GMR Group's energy businesses are currently having an installed capacity in excess of 3,000 megawatts. Moving on to Dish TV, the chairman and the non-executive director, which is Jawaharlal Goel, has stepped down. The shareholders of Dish TV have rejected the proposal to reappoint him, and Yes Bank, which is the Dish TV's largest shareholder with nearly 25% stake, has opposed Mr. Goel's reappointment. Additionally, Yes Bank had sought the removal of 5 directors in total, including Mr. Goel, citing corporate governance issues in the past. Back to you.
Okay, Vahishta, thanks a lot for that. So here's a quick recap of all the stocks that we're looking at. Stocks with positive news flow. There's Glenmark Pharma, Zydus Life, Ashok Leyland, ONGC, Reliance Industries, GMR Power and Urban Infra and Dish TV. While stocks with negative news flow today, there's Zee Entertainment, there's Biocon as well as Spicejet. All right, let's now shift focus to some important macro cues. The first quarter GDP, as we know, has come in at 13.5%, which is below market expectations of around 15%. The GVA2 came in at 12.7%, which is below the poll that CNBC-TV18 threw up. Lata is here with the fine print. Lata, disappointing this time?
Yes, this 13.5% comes on top of a 20% in the first quarter of last year. So people will wonder, why is this so bad? 13.5 over 20% looks very good. But the Reserve Bank's forecast stands at 16.2. Now, if you adjust 13.5 and if the other quarters remain the same, then the Reserve Bank will have to bring down its full year forecast from 7.2 to around 6.7. I mean, just arithmetically speaking. Now, why is 13.5 bad when it is coming over 20% is the point I'm trying to make. Let me take the absolute GDP number. For Q1, the entire GDP is 36.85 lakh crore. If you compare it to Q1 3 years ago, pre-COVID, that is only 3.8% higher. Now, that is the problem, because the weakness of 2020 has not been overcome despite a 13.5. That's the important point to make. Let me take 1 or 2 areas which are particularly bad. Manufacturing. Manufacturing GDP is at 6.05 lakh crore. Looks good year on year, 4.8% higher. But look at it 3 years ago level, it's, barely 7% higher. Over 3 years, manufacturing has grown just 7%. That's bad. Construction, that's even worse. Construction GDP has come at 2.62 lakh crore. Year on year, that looks very good, 16.8% higher. But look at it from 3 year ago level. In 3 years, construction has grown 1%. And the worst performance comes from trade, hotels, transport and communication. That's a large sector. It's the biggest entry in GDP. It accounts for all the services, you know, the Udupi hotels, all the MSMEs. That one is at 5.59 lakh crore GDP. Looks very good, 26% higher than last year. But compared to 3 years ago, it is 15% lower. That's the pain in the GDP, the MSME. Let me leave you with something which is good, private consumption. You know, consumption is doing very well when you look at the Titans and the other, Asian paints of the world. That one is at 22 lakh crore and it's 10% over the 3 year period, which is good. I mean, at least it is a 3% CAGR. Not great, but at least okay. Capital formation again at 12.8 lakh crore, 20% year on year and about 7% over the last 3 years. Not terrible compared to the others. So clearly everybody had to lower their GDP and you've got Citi lowering its GDP from, they were standing at 8%, now they've come down to 6.7%. But Citi just notes that the personal consumption is very strong, showing domestic demand is good. JPM's GDP stands at about 7%, Morgan Stanley at 7.2, CLSA at 6.8. But I can tell you that almost everyone is below 7. That looks like the state of GDP this year.
Okay, that looks like state of GDP. Well, Lata's passionate about the economy, but you know what this tells you is maybe she's more passionate about Udupi restaurants, like like she said.
No, that's a large category, and so it is very painful when that one does badly.
I understand.
Aside from my passion.
I understand that.
Despite my,
My
many
passion adds to it.
contributions.
Exactly.
Okay. Well,
Both of you put together must have contributed quite a bit over the years.
In spite of it, 15% lower. So we better
and
eat
me
more.
as well. I mean, even though I'm a North Indian, but you know, I also have contributed a lot. But okay, we'll take a break. On the other side of this break, Aditya Suresh, head of India Research and Strategy at Macquarie Group, will be joining us for some fundamental stock analysis. Also, we'll connect with Keki Mistry, Vice Chairman and CEO at HDFC, to discuss their business outlook going ahead.